The German company Mensch and Maschine is a leading player in the virtualization market and a key partner for the industry giant Autodesk. Their remarkable record of huge dividend growth of over 20% for the last 5 years, coupled with a yield of almost 3%, makes it a very appealing investment for investors seeking to build a passive income. But is this dividend truly sustainable? And is the company a smart addition to your long-term portfolio? Well, in today's video I'll break it down. I look at the business models in the markets of MAM, analyze their strategic position by doing a Porter's 5 forces analysis, and have a look at the latest financial statements. I'll also check the valuation and do a discounted cash flow calculation to determine if now is a good time to buy. So sit back, relax, and let's explore MAM's investment potential together. My name is Florian and I use my background as a physics engineer to provide more scientifically inspired analysis on this channel. The ticker symbol of Mensch and Maschine is MAM and they are listed on the Xetra stock exchange. They are working in the information technology sector and were founded 1984. So, same as me, they will have their 40th birthday later this year. At the moment, they have a bit more than 1,000 employees and their headquarters is located in Starnberg, Germany. Their market cap sits at $1 billion at the moment. Mensch and Maschine is a leading provider of software and digitalization solutions in CAD and CAM, computer-aided design and manufacturing, as well as PDM, product data management, and BIM, building information management. They are a top European partner of Autodesk, offering customized solutions, consulting, and training services. This aspect of the business is categorized under the M&M digitalization segment. In addition to reselling Autodesk products, they also develop their own software for CAD and CAM and BIM markets within this software segment. With a customer base of over 30,000 different customers, over 100 users utilize their software, ranging from small engineering or architectural firms to large international enterprises. While the digitalization segment accounts for nearly 2/3 of their sales, the software segment is more profitable due to its higher margins. Their software is used in a wide array of applications, ranging from optimization and simulation for precision machining tools, over several tools for various types of building information management or BIM, to tools for product development management to connect engineering with commercial data like SAP. They even have software that is utilized in the engineering of large facilities, including electrical, hydraulic and pneumatic systems, as well as building services. Not all of their products are sold under their own name. Some of it is provided by their subsidiaries, OpenMind, Sophistic, Datafloor and MAM Mechatronic. In 2023, the largest share of their profit was generated in the manufacturing industry with 2 blocks. The bigger of these blocks is MAM's own Hypermill CAM software. This can help to reduce the production time spent with precision machining tools by up to 5 times and can therefore increase the return of investment for their customers on these very expensive tools. The second block has the longest history and goes back to the founding of MAM. Its focus is on the customization and training for several different tools for mechanical engineering in different industries. The architecture, construction, engineering segment is their second largest one with around 35% of gross profit share. And this includes their Datafloor and Sophistic software that are used for gardening and landscape planners in case of Sophistic, and supports planner and construction companies in civil engineering like bridge or tunnel building and design. The remaining 10% can't be directly linked to either one of these segments, but are rather a hybrid in between the two. Most solutions are based on the CAD standards from Autodesk. The blue field in the diagram shows that roughly 20% of the profit across all sectors is generated through resale of Autodesk software. So we can already see that a large chunk of their profit actually depends on Autodesk. That is also reflected in the operating costs, where the cost of Autodesk resale make up a good chunk of the overall costs. But Autodesk already announced a change in the business model from a resale to an agent model at the end of last year. This will essentially discontinue all resales from this August on and will significantly reduce the costs for MAM. But their sales will also decrease to the same extent, which should result in significantly higher margins, while the gross profit and earnings should not be affected by the change. MAM's management is expecting some conversion effort in the short run, but are welcoming the change, as it means a streamlining of their business model and balance sheet. We should also keep this in mind when we look at the forecast and the financials later in the video. Geography-wise, most of their revenue is generated in Germany, even though MAM is operating on a global scale with 75 locations in 22 different countries. Further, 20% are generated in Switzerland and Austria, while the rest of Europe makes up another 30%. Only a bit over 8% is generated outside of Europe, so there is a high concentration, especially in the DACH region. The CAD market that Mensch and Maschine is active in is experiencing some secular tailwinds. The expected global compounded annual growth rate is 6.7% until 2030. The construction market alone is vast with over $12 trillion globally. It has millions of active players, and the majority of them, especially the smaller players, are lagging on digitalization. So a proper planning software can reduce costs and help to improve the utilization of tools. This is crucial as there is a lack of well-educated workforce in this industry. But it gets even better for MAM. We saw before that all of MAM's software is used for digital twins in various industries. Digital twins in general are virtual representations of physical objects, systems, or even whole processes. And as a result of increasing adoption of advanced technologies like Internet of Things and advancement in data analytics and simulation capabilities, the demand for these virtual twins is rising quickly. The global growth for this market is expected to be at 41% annually until 2035. So there is a lot of potential for organic growth in this industry. But how good is MAM's position in this market really? Let's try to find this out by doing a Porter's 5 forces analysis. First of all, I would estimate the threat of new entrants as low. There is significant know-how necessary in this special kind of virtualization software that MAM is providing. Their strong and established position in the market and high brand loyalty further protects them against new players. The threat of substitutes is medium. Most of the software they sell is designated for very special tasks and sometimes even custom made. That makes it unique and harder to replace than some of their competitors. Still, there are alternatives available and sometimes even open source ones. The competitive rivalry is medium. The competitive rivalry in this 3D design software space is fierce between the few main competitors. But MAM is not directly competing with the bigger players in the market, but rather focusing on some niche segments. Still, their role as technology leader in these niches require intensive development activities, especially in their software segment, to stay ahead. The bargaining power of their customers is medium to low. Even though there are some alternatives available to MAM's products, there are significant switching costs that come with the familiarity and the training on a certain software and the integration in their customers' workflow. This makes it hard, especially for smaller customers, to switch to different products. The role as a consultant and trainer for their own and Autodesk software only increases their visibility and standing in the market. The bargaining power of their suppliers, on the other hand, I would estimate is quite high. A significant part of MAM's business relies on Autodesk's software. This dependency grants Autodesk considerable bargaining power despite the fact that the forthcoming changes in Autodesk's business model currently only offer advantages for MAM. Overall, the strategic position of the company is a bit mixed. They do have a moat with their custom software and expertise. Their business model that not only includes the software but also training and consulting gives them a good standing in the industry. But their large dependency on Autodesk also brings some significant risks. Before we look into the financial details of MAM in just a second, let's also see how the performance of the stock has been over the last couple of years. And over the last year, their performance was not too great and it did underperform the market quite a bit with a total return of only 7%. Over the last 5 years, the results were also a bit disappointing with only 64% total return. Over the last decade, however, the picture changes. Here, the company could easily outperform the German stock index DAX as well as the S&P 500. But even though the performance of the stock was not great over the last years, the fundamental picture does look a bit different. Here we see a revenue growth of almost 10% annually for the last 5 and 10 years. Net income and earnings per share did even increase by 17% annually in the last 5 years, and with almost 14% annual growth, the free cash flow lies in the middle, but also on a very nice 2-digit level. With a 4% free cash flow yield, the company significantly exceeds the average yield of the S&P 500 by more than double. We also see a steady growth in the margins, and the expectation for 2025 is a further step up from the current levels. MAM is paying a dividend, and the payout ratio is with 93% very high, quite a bit above my regular threshold of maximum 70%. But when we compare the dividend payments with the free cash flow of the company, the picture looks a bit different. Here we only have a payout ratio of 50%. So even though the payout ratio looks quite high on first glance, it is still well covered. The company also has very little long-term debt, which can even be covered from the cash reserves. The share dilution was 0.6% each year over the last 5 years, so overall the company has issued new shares, but on a low level, and they also bought back shares from time to time. There are 2 additional things that I noticed during my analysis. One thing that is not nice, but also not on a critical level yet, is the goodwill of the company that makes up more than 20% of the total assets. But we also see that the portion of goodwill has declined over the last years. The second thing is the large portion of shares that are still held by the founder of the company, Adi Drottlev. He's still holding almost half of the shares, talking about skin in the game. And even though Mr. Drottlev is not the CEO of the company anymore, he is still active in the supervisory board. With a dividend yield of almost 3% and a huge 5-year dividend growth rate of over 20% annually, MAM is rewarding their shareholders very nicely. This dividend growth rate is also way above the inflation and also the share dilution, so in the bottom line, the company is returning more and more money to their investors. The forecast for the company is in line with the market trend, and the 1-year price target of analysts expects an upside of 22 to over 30%. The earnings per share is expected to grow with a nice double-digit growth rate of around 14% per year until 2027. The revenue, on the other hand, is expected to decline next year and 2 years from now, but until 2027 it should still grow with a CAGR of 1%. This revenue dip in the next years and the lower growth rate that results from it is mostly linked to the change of Autodesk's business model that we saw before and should not affect the bottom line of the company. This growth forecast is also in line with the expectations of Mensch and Maschine themselves, who have the target to double their profits in the next 4 to 5 years. The company is also planning to increase the dividend by 12% to 19% per year this year and again next year. So the high dividend growth from the last few years should continue at least for 2 more years. From a valuation point of view, the company doesn't look too expensive. The multiples EV to EBITDA, PE and price to cash flow are all sitting below the 10-year averages and even further below the 5-year averages. This is already a nice indication that now might be a good time to buy. But before deciding, let's also see where the fair value of the company is at the moment and how they compare to their peers. For my calculation here, I used a free cash flow growth rate of 11%, which is a bit below the analyst expectations for the next couple of years. For the net income growth, I used 14%, which is roughly in line with the forecast and a bit below the average of the last 5 years. And for the Gordon growth model, I used the long-term dividend growth rate of 7.5% because I don't think that the company can keep up with this insane dividend growth rate they currently have until all eternity. They will need to lower this sooner or later. But even with this growth rate, that is not even half of the current growth rate, the fair value of the company is quite high, so maybe my estimation of 7.5% is also still too high. For the discounted cash flow and multiples calculation, I come to a fair value that, when including my margin of safety of 20%, sits a bit below the 1-year analyst expectations, but still gives quite some upside. So from a fair value point of view, the company also seems to be cheap at the moment. Before we sum this up and come to our conclusion, let's also compare MAM to their closest peers. For this comparison, I choose the two market leader, Autodesk and Dassault Systems, and another smaller German player in this market, Nemetschek. Unfortunately, the total return that Seeking Alpha provides here is not quite correct. MAM actually had a total return in the last 10 years of around 1000%, which was still surpassed by Nemetschek, but did also outperform the two bigger players significantly. From a dividend perspective, MAM is the most attractive of the bunch, with the highest yield and with a huge gap, by far the biggest dividend increase, even though it is not shown here. The valuation of the company is also the lowest of the peer group in all metrics, with only Dassault Systems coming close. Autodesk and Nemetschek are both quite a bit more expensive. But this can be explained by the quicker growth, especially in the last year. Here, Nemetschek and Autodesk are the leaders of the group. And even though MAM could increase the margins steadily over the last years, both Autodesk and Dassault take the lead here with a significant distance. But this can also be explained with the slightly different business model, and the expectation for MAM is also actually a significant increase of the gross profit margin in 2025. Before we sum this up, if you do like the video so far, please leave me a like and subscribe to the channel so you don't miss out on my next analysis. And now let's come back to the question, is MAM a good investment or not? The company has enjoyed a decade of double-digit growth of their fundamentals all across the board. Its free cash flow yield, which is double that of the S&P 500, along with a very clean balance sheet, is quite impressive. However, historical performance does not guarantee future returns. Nonetheless, the market in which MAM operates are experiencing significant tailwinds. The virtualization market especially is expected to grow at an annual rate of over 40% for the next 10 years. This should support continued organic growth of the company. Additionally, the insane dividend growth rate of over 20% annually over the last 5 years, coupled with a dividend yield of 3%, makes MAM very appealing for investors seeking a passive income or those focused on dividend growth companies like myself. Despite a seemingly high payout ratio, it is well covered by their free cash flow, and the company anticipates similar dividend growth rate for at least the next 2 years. There are, however, two major concerns. First, MAM's concentration on the European, particularly the German market, makes it heavily reliant on the local economy. And while this is not per se bad, it increases the risk compared to more globally diversified companies. And second, their dependency on Autodesk is also notable, as much of their software is based on Autodesk's platforms. Overall, the deeper I explore this virtualization market, the more promising it appears. I think that MAM can be an excellent investment, especially for dividend investors, if they are comfortable with the risks that I just mentioned. At the moment, I am actually a bit torn between investment in MAM and Dassault Systems, another European provider of such software that I also used in the comparison of the peers and who is operating on a more global scale. I think that both companies are great compounders and can bring great returns to their shareholders over the next few years. If you want to check out Dassault for yourself and see if they could be an even better fit for your long-term portfolio, check out this video where I dig in all the details. And please, before investing, do your own research and only use this video as a starting point for your own analysis. That being said, thank you so much for watching, guys, and see you in the next video.